Today was a red day for AMC, but I am still surprisingly bullish, and I have reasons for that. I don't want to waste any time. I want to hop into the Elliott Wave Analysis Forum that I started on Sunday or Saturday. Here it is. So the first thing I want to mention is that I've made a correction, that instead of this minuet wave 3 ending here and then having the 4 wave start, let's see here. I had the 3 wave going up and the 4, and I called all of this 5, and that wasn't correct because then the minuet wave 3 was going to be the shortest, and that just can't be because the minute wave is going up, and so the motive waves need to match a 5 waveform pattern. And that did not occur there. And so what I had to do was reanalyze it. And when I did that, to make wave 3 the longest, I had to use the top at 16. And what that did was make the gap fill from that level wave 4. But as a corrective phase, it should have been in a 3 waveform. But what I saw was 1, 2, 3, 4, 5, which is a motive wave. So that was wrong. And then I had to make wave 5 truncated, and it truncated into a corrective wave, a 3 waveform. It should have been 5 because the minute wave is going up. So the minuet wave should match the degree one degree higher, and it didn't. But also that high started the next minute wave 2, which is corrective, and so that blew my socks off. I don't think anything says I can't analyze it like that. That you have a motive wave form, a 5 wave form is a tendency and not a rule, I believe. This is really interesting. What do you do when a gap up forms the top of wave 3? At any rate, when I analyzed it in this way, it still made sense moving forward. So that's how I'm going to keep it, and that's my story. So here we go. Now, the minuet waves are currently, let's see here, where are we at? We're currently in minuet 5, right, of wave 2, okay? So we have an ABC correction occurring at the minute level, and that's coming down, that top from 16, and it bottoms here, and this is A, and then we rise to corrective point B, and now we're going in for C, and because the minuet is down and the wave of 1 degree higher, the minute wave is down, I'm looking for a 5 wave subminuet. And that's what I found. And that's what I'm showing here in yellow. So I'm going to zoom in a little bit and talk about what I saw here. And you'll notice that my labeling has changed. And I've done that to make it match the nomenclature that's being used in this book. This book's blowing my mind, and I gotta tell you, the more I research it, the more intense my analysis is gonna get. So we started at this at the minuet wave 4, and we started coming down 1, 2, 3, 4, and here you can actually see that wave 4 comes up into wave 1, which is not supposed to happen, but it can happen. They say it in here that it's all right as long as it happens intraday, and it's common because the markets are no longer cash, right? We have derivatives markets, right? So there are exceptions, right? And I should be trying to find some quotes in here. That'd be good. I think I'll do that next time. Try to figure out how I want to share this, because I'm going to get a lot out of this book, and I want to share it and vlog it, but it's going to take a lot more time. I'm going to prepare more for these videos. But he says here, the most common motive wave is an impulse. In an impulse wave, 4 does not enter the territory of or overlap wave 1. This rule holds for all non-leveraged cash markets, and that's totally not what we're dealing with, right? Futures markets, with their extreme leverage, can induce short-term price extremes that would not occur in cash markets. Even so, overlapping is usually confined to daily and intraday price fluctuations, and even then is rare. And what I'm seeing is that it's not very rare, but it is brief. And that's what that overlap is between the subminuet wave 1 and, well, 1, 2, 3, 4, coming up high into wave 1, right? So what we see today we had this big dump. This is the open, right? So this is going to be wave 3, and we bounced, and now we have, I should be finding a 5 wave form of this 5 wave, 1, 2, 3, 4, and then it seems to do an extra 3. We had an extension, I think, of that 5 wave, which wasn't what I was expecting. And now that we're at the end of that sub-minuet wave 5, I'm looking for an ABC correction to confirm that we are going to see a reversal. What's interesting here is there's actually a pennant in here, right? And I'm thinking to myself, oh my goodness, pennants? That's a chart pattern. Wait, are Bulkowski's patterns just Elliott waveform analysis? And the answer is yeah, and he actually says it on his website. He says, hey, this is the authoritative source for Elliott wave analysis, and this is where I found my chart patterns. I was like, what? No way. And it's true. And so you can see I have some pulled up here about triangles and whatnot. It's crazy. So, We've had a breakout of that pennant, a close above it on some good closing volume, which was fantastic to see at the very end of the day. However, I didn't see a new high set above this point here. This would be point A of that corrective 1, 2, and 3. I do think, though, that if we have an open that's green, that's green tomorrow on Tuesday, we'll confirm that reversal, and then we'll start minute wave 3. Minute wave 3, which would be very nice. Okay, so let me think about this really carefully because there's degrees and levels in Elliott waveform analysis, and you have to get them all right, like in terms of labeling them. So when I'm showing the waves on that 1 minute, such as here, that is a sub-minuet. And it's part of a minuet wave, which here is wave 5, shown there. And that sub-minuet is part of a minute wave, which is larger, and I show it by this green dashed line, and it's noted as 1. Okay, so I'm waiting for the third wave, the third minute wave to start. And I have the targets I have for that labeled here. I thought we'd start today, but we didn't. I'm going to leave these numbers here to show where I'm expecting those price levels to occur for the waves, peaks, and valleys. And just remember that they're about a day behind. So moving into tomorrow, I am looking for a green open. And a green open for me is going to confirm a minute wave 3, which is the most common wave to be extended. So my target for the wave is 18, and it can't be the shortest wave, right? So that either means if we get a reversal at 18, that wave 5 will be shorter than wave 3. Wave 1 is $6. I'm expecting another $6 wave. So it can't be the shortest. That means the 5 would have to be shorter, which would suggest a double top. Or we get an extension of wave 3, and we go from 18 and we start hitting 20 with that extension, which is really what I'm hoping for. And that would be a great breakout of this double bottom with a handle we're looking at an ugly double bottom with a handle on AMC. So that's my Elliott wave analysis there. I want to switch styles here and look at my chart patterns now. Standard. And pennant, please. How about not on the daily? Let's go into a 15-minute time scale. It's my preferred time scale. And you can see that there is, here, I'll just do this too. There is a channel. There is an upward channel that we're in. And this makes me think that we're actually watching minor wave 1. That's a degree higher than the waves that I was showing earlier. So I'm optimistic that we've actually made a complete reversal here at 970, and we'll continue to watch the price rise, and sentiment's going to be awful for a while. Now, yesterday I was saying that there is possibility that we continue within this pennant for a short while before seeing an upward breakout, and we did have an upward breakout. We did have it. We did dip a little beyond what I was thinking. I said $11.86 to $12, and I think today's low was $11.87. So what is that, a penny off of what I said yesterday? Go watch yesterday's video. I said $11.86 to $12, and we had $11.87. So I was hoping to get a surprise boom of volume to signal a breakout. We didn't get it, but we did get an upward breakout. We closed above that pennant. Now, it's probably going to open tomorrow and touch down on the trend of that pennant before setting another minor high. I'm really hoping, though, that just the open's green and we have that big surge of volume. And everyone's asking, what? Why? And I'll be like, it's the chart pattern analysis. Like, I'm sure the news will have, if it does happen, this is going to have some explanation. CPI data is expected to come in lower than expected. Oh, all these bears are getting wrecked. Oh, whatever it is, I don't care. Like, I think the waveform analysis suggests that this is the beginning of a great thing. I'm going to turn on my day trading chart really quick, go to the 1 minute. I'm taking so long, but I'm not worried about the length of these videos at the moment. I see that people generally do actually watch a surprising amount of my videos, regardless of how long they are. So that's really cool. I'm glad that the content is that engaging, and I'm always going to try to improve it. Always going to be trying to improve my content. I have some new equipment coming in too, so that'll also increase the quality. Now, I'm going to zoom in on this so I can kind of get into it. I did say if I saw a V-type bottom, I was going to start trading calls, and I saw that double bottom come up, and when we sprung past this trend line between the intermediate peak and the beginning of this double bottom, I started hopping into calls. And so I first bought a July 1st 1150 call because it was in the money and it has a more distant expiry. So it's a little safer of a bet. It would cost me $200, which is fine. It's quite a bit chunk of change. And I actually like that. I want to get most of my cash into safer options because now that my account balance is no longer hitched largely in long positions, that means it's very vulnerable. And I want to make sure that the majority of that cash is either withheld as cash or is sunk into really safe options. Really safe options, no such thing, right? But deep in the money. I should have gone deeper in the money than this, but that's okay. And I started buying weeklies as well. So I bought a weekly here at the bottom, sold it up here at the top, cash, pocketed about $10. When I saw the bottom come in here, I bought another weekly, sold it up here, cash, pocketed a little bit of cash. And I did that because I want to build that cash up to hedge the paper losses. I wanted to actualize a little bit of gains to help me hedge against the paper losses from holding this July call, because I figured that would be the case. As soon as this handle from this double bottom broke down, I knew that I was going to have to hold red for at least a day, and I don't like that, but I prepared for that. Anyway, I did buy it back into a call here, and I'm still holding these 1150 calls. So for the day, I actualized a gain, but I am holding a paper loss. I hope that tomorrow I can get a rally and I can seal gains on today's trades as well. So I'll have 2 green days to start my day trading project. That's really what I'm trying to do, is just get started on the green. Typically, I don't like to hold options overnight, especially if they're weekly expiries. But today I made an exception. Today I'm asking for just a little bit of luck. We ended the day on a pennant. As you can see, there's the breakout, push 1, 2, and 3, kind of coming down to 4. You can see it does overlap into wave 1 there just a little bit, but these are wicks, and we didn't see the realization of wave 5, but that's okay. I think that is what is going to drive a push higher tomorrow morning at open. I'm going to go ahead and open up after hours just really quickly because I have no idea what's going on out there. Probably nothing. Whoa, 1204. Okay, 1204. That's nice. Sweet. Hey, there's wave 5. I don't like to look at after hours. I really don't, because anything can happen. But this bodes pretty well. Okay, that makes me optimistic for tomorrow's open. I'm gonna go ahead and close that. So, what's my timing at? 13 minutes, and all I did was cover 1 day of AMC. I'm gonna go into the daily time frame, and we're gonna look at my default drawings. These are the biggest patterns, the most reliable ones, those that serve me the best. And you can see this symmetrical triangle in blue that the price did break out to the upside and is now coming down, and it's still bouncing on that trend line. And when it ceases to bounce on that trend line, that will be a good day. Volume has been decreasing since the high at 16. I see this as a reduction in selling pressure. The RSI has crossed below 45, which is kind of bearish. Implied volatility flexing a little bit, saying, hey, I'm ready to go higher. This is good. I expect that the price and IV will, that's implied volatility, will continue to correlate positively. That is to say, as price increases, implied volatility will as well. And that's what we saw today on the intraday, I believe, as well. I'm optimistic. I'm still bullish. I'm not bearish until we get past this lower trend line of this pennant. In fact, I wouldn't be surprised to see at this point just a big rally, a huge push to 18. I'm not kidding either. I thought we'd see it earlier, but this is looking great. Looking really good. I'm really excited. I'm excited for this. Okay, so let's go ahead and have a look at GME next on the daily time frame. What do we have? We have a pennant up here, right? And now that pennant has just grown. That's what that's showing. It was a red day as well. Inside trading day for GME. Not a big deal. The markets are still waffling back and forth. Oh, is the world going to end or are we going to bounce? Oh my goodness. I think inflation's going to come in lower than expected. It's going to be a great catalyst. And then we'll have some Fed speak next week. I think next week? What day is it? The 6th? So Bulkowski says that you shouldn't trade a high and tight flag until you see a breakout to the upside above that high. And that's true. And it's a great tip because, well, you can see that we had a pennant here. That was the upper trend line. And now we have it's just a higher trend line. The pennant has expanded. In fact, less of a pennant now and more of just a straight up flag, parallel trend lines there. So GME still looking beautiful here. If the price can open green tomorrow, that would form a partial decline, which is a bullish thing in a channel, which is inherently what a flag is. So I am looking forward to GME breaking out to the upside and still pushing up towards 180. Yeah, 180. AMC, $20. GME, 180. SPY, I don't know. We'll see what SPY is. what do I think SPY is going to do? Still same story, right? Same story. You got these funky bottoms. They're funky. They're weird. But we have a big push higher now, and we are consolidating. I'm going to try to find some charts here. And let's go out to the daily time frame. I have way too many charts right now. Way too many charts. So as you can see, we do have... Ooh, this is interesting. I think that's a diamond. I'm going to zoom in a little bit. Can I see on the 15? Is it really a diamond? I don't know. Diamonds can act as continuation patterns, or they can act as reversal patterns. So I personally have seen them acting as continuations more than reversals. And that typically occurs as a half staff formation, so that would be a bullish thing. Do I have a diamond here? I think I do. So let's zoom in on this thing. It's ugly. Touch point, touch point, touch point, touch point, touch point, touch point. A little overextension there. Maybe that tops a touch point, a couple of touch points. I think you could call that a diamond. I think you could. It's ugly. It's ugly, and I would really rather look at it as a handle, like a flag or a pennant. Let me actually show you. It looks like there's a horizontal level support and resistance up here. There you go. That looks nice, doesn't it? Now that our pennant has an ascending triangle form to it, which tells me that there's a level of overhead resistance above, but that the buying pressure is increasing. Sellers are leaving the market. I think there was some people who were eager to get out of positions here because this was scary. So when the price rises, they sell, and that's wrong. I think that's wrong. Of course, what do I know? I'm just some amateur vlogging, right? Don't listen to me. But if I had to put money on it, which I am, I would say that we're going to see a breakout higher, that we're going to go to that target. I really do believe it because we've had a big breakout. One wave pushing up and out. Two, and we want to start three. Show me three. So SPY, it's just waffling back and forth like it was last week. That's all I had to say about it. IWM is no different. It's the exact same story. The markets are trying to figure out what's going on. I myself am optimistic because others around me are super bearish, and I believe sentiment is going to always be skewed to the downside because social media loves a bad story. But that's not what I'm about. Nope, I'm about charts, analysis, and logic. And if you ask me, I don't think things are as bad as people think they are. And I mean, volume's decreasing through this selling right here. So I'm just going to be looking for a volume cue, a nice little spike higher. I don't know what's going to be the catalyst event. It could be low CPI, information, data, whatever. And also, just really quickly, I just want to vlog this. When people call inflation the rise of prices, that drives me nuts. Stop doing that. So annoying. Inflation is not the rise of the consumer price index. That's not what inflation is. In fact, you can inflate the money supply, but if deflationary pressures are greater than inflationary pressures, then guess what? Your CPI is probably going to go down because there's more deflationary pressure than inflation. So that would happen in a scenario where you have massive destruction of loans, probably either through default or by being closed, and also the money printer being turned on, trying to crank up liquidity. So if you had a bunch of defaults on loans or loans being paid off, and it's just like crushing and compounding, then you want to turn on that money printer as fast and hard as you can. And maybe I'm onto something there, right? So anyway, inflation is the increase of the money supply. The increase of the money supply, not the rise in prices. Okay, enough said there. So I covered AMC, my Elliott waveform analysis, my day trades, GameStop, IWM, SPY. Just looking for more upside. I vlogged about one of my ticks. I hate that people think inflation is the rise of prices because it's definitively not what it is. And there's different kinds of inflation too. And there's a lot of different types of consumer price index and price index data. And you just can't sum it all up and put it in a ball. It's like, come on. Anyway, okay. Happy trading.